Hey guys, it's Paul here from Better Call Paul. Today is day 29 of my 30-day challenge. So only 2 more days to go and I'll be done my November challenge of doing 30 ETFs in 30 days. Today I'm going to talk about a company that I'm not really that familiar with, only because I don't use the platform. But Harvest did come out with this ETF, and it dropped pretty much, like a stone the first day it was launched. And we'll take a look at why that happened. Obviously, it had nothing to do with covered calls because it had only been out for one day. But after it dropped, it recovered a little bit, then dropped again. I thought, you know what, I'll just start a small position and, try to catch some capital gains on the upside, when it recovers. So today we're going to talk about Harvest's RDDY, or Reddit single stock ETF, part of their high yield series. All right, so we'll quickly jump into their website and see what it's all about. All right, guys, so it's the Harvest Reddit Enhanced High Income Shares ETF. The overview. So the Harvest Reddit Enhanced High Income Shares ETF invests all its assets directly or indirectly in shares of Reddit. Reddit operates a digital community in the United States and around the world. Its platform enables users to engage in a wide variety of shared interests and create and organize communities. All right, so now we know what Reddit is. What does Harvest do to make us money? The Harvest Reddit Enhanced High Income Shares ETF provides access to the growth of Reddit and overlays an active covered call writing strategy on up to 50% of the position to provide high monthly cash distributions to its unit holders. And the reason why they do up to 50% and not always 50% is because the guys managing this portfolio, they look for trends in the market. And if they can see that Reddit is going to be going up in value, it doesn't make sense to write calls on 50% of the portfolio, because then they'll capture less of the upside. All right, so they can reduce how much they're writing, capture more of the upside, and some call premium at the same time. It applies modest leverage at around 25% for higher income and growth potential. Units of the ETF are available in Canadian. All right, so we can see the ticker is RDDY. So it holds Reddit, which is RDDT, and it's currently paying 35 cents a month. This is a large distribution. The market close was $9.83. Now, this ETF did come out at $12. As I said, it dropped a lot the first day. Assets under management, $48 million. That's pretty good for a Canadian fund that's only been around for 2 months. It is Canadian unhedged. Management fee is consistent at 40 basis points, and the risk rating is high, specifically because it has leverage. It'll always be high. You can see here it shows you just the historical price of Reddit. And it shows just the first two distributions, which was 35 cents both months. Of course, the portfolio breakdown, it holds all Reddit stock. I quickly asked ChatGPT, how does Reddit make money? I figured advertising was definitely one way they made money, but I just wanted to see what else they were doing to make money if I was going to invest in this ETF. So they do have Reddit Premium, right? So you can pay a subscription. Virtual goods, right? They sold coins. It says they've been moving away from the system, but digital goods and special features still bring in some revenue. They have Reddit collectible avatars. They partner with artists and sell digital avatar items. And data licensing, right? This is one of Reddit's fastest growing areas. They license access to their huge database of public posts to companies. And then they have partnerships and events. So this is all the way that Reddit is making money. Obviously, Harvest has done their research and feels that this is a company worthwhile holding in their portfolio. So let's take a look at Reddit, the stock itself. And I only put for the last 3 months because RDDY's inception date was October 1st of 2025. So you can see here that here is September 29th. It was at $241. And then on October 1st, it dropped 10%, well, 9.99% on the first day, right? And you can see it's been kind of down here ever since. finally, well, dropped down to 183 and then started coming a bit back up again. But anyways, you can see this is why RDDY tanked right off the bat. And this happens sometimes, right? When they launch an ETF, it can drop quickly. So I'll take a quick look here. In my TFSA, I have RDDY. I only purchased 125 shares. So like I said, this is not a big position for me, but I am currently up 4.48%. I got in at $9.33. All right, guys, so that's Harvest's Reddit high yield share ETF, right? RDDY. Now, the reason why I wanted to talk to you guys about this particular ETF today is because, as exciting as it is, okay, with a 35-cent distribution, what I'm trying to say is that this should be a small position in your portfolio, okay? I would not, make this a 50% position in your portfolio unless you really know the company Reddit well and you believe in it that strongly, okay, and you're okay with the volatility, right? Because with the leverage, there's the potential for it to swing up fast, but there's also the potential for it to swing down fast, kind of like MSTE. Now, personally, I own quite a bit of MSTE, but I'm okay with the volatility, right? Right now it's down and the distribution came down as well. Okay, so that lowers my monthly income, but I'm okay with that. I understand how it works. I believe in the underlying holding, which is MSTR. Okay, I believe in Bitcoin, and I'm okay with that volatility. In fact, come December, I'll be buying more shares. But that's for my plan. That's for my portfolio. That suits my risk tolerance at this time. And I've also been adding to my defensive positions. So I consider that a base, right? I have my base, and then I have positions like MSTE and RDDY where they're, ultra yields. They pay a lot more, but I understand that there could be a lot more volatility, right? If you look at HHIS, which is my largest position, you'll see that the share price has not really fluctuated a lot, especially recently with the bad month that we've had. It's only come down about $1, and the distribution has gone up twice. Okay, so I'm trying to get people to understand that if you're going to add an ultra high yield single stock ETF to your portfolio, make sure you understand what you're investing in. Okay, this is probably not something you want to put in your margin account, right, and risk losing money, right? This is something you want to have as a small holding in your portfolio, and and don't use margin. Okay, so you want to be safe, all right, and maybe out of Harvest's portfolio where they have 19 different single stock ETFs, choose a few of them. Don't just pick one, right, and put 10, 20, 30% of your portfolio into it, right? You can also diversify. You can get some products from Hamilton, maybe HYLD, C-Day, S-Day, Evolve. You have sector specific. You can get bank, you can get UTS. So there's a lot of ways to build a very strong and safe portfolio without having too much risk. If you want to have a little bit of risk and try to boost your monthly income, that's fine. Just know what you're doing and don't take too much risk. All right, guys. So tomorrow will be the last day for this series, and then starting in December, I'm gonna look at doing some more, portfolio building videos, some more educational videos, and I got to get back to a few case studies that my laptop was broken. Well, my stepson's laptop was broken, so I finally got it fixed. So I got to get back to some videos that I missed and catch up. All right, guys. I hope everybody enjoys the rest of their weekend. And until tomorrow, bye for now.